Hello everyone, welcome to today's episode. I have right here with me Charlie, our incredible head trader. How are you doing today, Charlie?
I'm very well, thank you. Henry, how are you?
I'm doing great, thank you.
Good stuff.
So in today's episode, I want us to talk a little bit about prop firms, advantages, the pros and cons basically, because I believe the prop firm industry has really seen tremendous growth in the industry and trading, and they've helped a lot of traders. In as much as there's a lot of good things they've done, there's still slight things that some people complain about when they're using a prop firm. So what has your experience been using a prop firm? What would you consider to be like the pros that you've experienced using a prop firm?
Well, I think the main pro is obviously leverage, first of all. I think that's the main obvious one. Another pro is it forces you to become a better trader, in my opinion, because of the parameters, the rules.
Yep.
Maybe not so much the rules in terms of news trading, holding over the weekends. Those sorts of rules, in my opinion, are cons. And to be fair, a lot of the prop firms now have sort of got rid of that. There are still some prop firms out there that have those rules in place. But yeah, I think, leverage, the rules really, like I said, really refines you as a trader. Or it refined myself anyway. And just being able to trade that larger capital is good for your mind in terms of training your mind up to see the larger numbers.
Yeah.
Because obviously the main goal down the line is to trade personal funds for myself. I don't know about anybody else, but to trade personal funds. And if you're not used to seeing those numbers, and it still might only be 0.5% risk, 1% risk, but if you're trading a seven-figure account, 8-figure account, obviously the numbers are going to be larger. If you're not trained psychologically to see those numbers floating up and down on your MT4 or MT5 or whichever platform you use, then it's going to be a big shock to you if you don't do that. So yeah, I'd say prop firms is definitely good for that as well. I'd say, to be honest, a con is the fact that there are so many rules at times. It can be a bit, it can be a bit too much, because in real trading, there really isn't any rules. I know, like, as a trader, you should have your own rules, and we do, you do, I do.
Yep.
But there's no rules in terms of drawdown limits with your own funds. There's no pressure to reach a profit target or anything like that.
Yeah.
So that, I guess you could say, is a con, but I see why they do it, because they want good traders.
Yeah.
They want to know that you're disciplined. They want to know that you can manage risk and all the rest of it. So I do see why they do that. But I would say there's definitely pros to handling your own capital. Obviously, one of the main things as well is the fact that you can withdraw whenever you want, with your own funds. With prop firms, you'll have to wait a specific date.
Yep.
They'll have to basically analyse your account, analyse your trades, make sure you've not, if there is a rule, for example, with news trading, make sure you've not opened a trade within 2 minutes of the news coming out, or obviously that's just an example. They'll go through all of that, whereas obviously, like I said, if it's your own account, you're in full control. You can do whatever you want. I'd say those are the pros and cons. There are many others maybe that I've not thought of. What's your views, Henry?
Yeah, I think the prop firm industry, they've really helped me personally. They helped me in risk management.
Yeah.
Because when I started trading, I wasn't really having the right education. So I was thinking, you can risk however amount of money you want, but then subsequently after my mentorship, and then when I started trading for prop firm, I realized that you really need to cut down the risk, because most of them has a risk limit of 5% per day. Yeah. Some do 6% per day. So a lot of traders that are not really experienced, they believe because there's a 5 or 6% drawdown limit for the day, that means I should risk 3% per day. But what that helps me is I have to divide that by 10.
Okay.
So if the drawdown limit for a prop firm is 5% per day, that means my personal drawdown limit per day is 0.5%.
Yeah.
So I usually use very small risk, like I've told you this before.
Yeah.
My risk on trades are usually 0.15, 0.2, max 0.3 per trade.
Yeah.
So the moment I take, if I take like 3 losses, risking 0.2, that means I'm done for the day.
Yeah.
I've already hit my drawdown limits.
Yeah.
Because I'm psychologically telling myself to not go above their drawdown limit. Because I've had experiences where I held a trade overnight and it was a like 6% profit. And then I didn't close that trade because I had the intention that it was going to keep going up.
Yeah.
And then eventually the next day, the trade reversed and I already trailed my stop loss to like 1%. And the trade took me out. And back then I was risking 1% per trade.
Oh.
So it took me out and they said I violated their rule.
Okay.
Because the new day account has 6% profit.
So it was equity based.
Yeah, so it was equity based.
Yeah.
So after that day was the reason why I had to drop my risk and then just focus on that. So because I left the trade with profit, but it violated their rules. Yeah. So it was one of those things. At the end of the day, it's all about experience. You know, the more experience you have, the more mistakes you make, the more you learn. Like you can't learn from just success.
No, not at all.
Most of the greatest learning process you're going to encounter in trading is from failure.
Yeah.
When you've blown that account, when you've lost that money, you now realize, okay, why did I lose this money? Why did this happen? Because after that happened to me, there's no way I'm not going to make that same mistake again.
Yeah.
If I'm in a trade and I'm holding 5% profit, there's no way I'm not cutting it in half.
Yeah.
You know, so because it was a winning trade that ended up being a losing trade.
Yeah.
You know, so it really helped me with risk management, helped me with having access to more capital. Because if you're trading like a $1,000 account and your risk is 0.2%, you're basically going to be making nothing at the end of the month. Yeah. But when you're trading a bigger capital, even if it's just $100,000 account, and you're risking 0.2%, that's like $200.
Yeah.
So if you hit a 1:5, that's 1,000. If you hit that in a day, that's 1,000 a day. If you can get 4 winning trades, 1:5, risking 0.2, that's like $4,000 a month.
Yeah.
You know, on just 4 trades, risking 0.2%, which is basically higher than what a lot of people earn in a day job.
Exactly.
So you're basically out earning them with just 4 trades, 0.2 risk, aiming for 1:5 risk to reward. So the capital perspective, they've really helped in that aspect. I think that's a big pro, and risk management as well, because if you cannot trade a prop firm account successfully and not violate those rules, it's going to be very hard for you to trade your own personal account and not blow the account. Yeah. Because if you have that mindset, I'm going to risk 5%, is my money. And then that means 10 trades, you're 50% down. 10 losses, you're 50% down. Yeah. And 20 losses, you're out. You know, that's it. But if you're able to manage those prop firm accounts, it now helps you when you're trading your own capital. You know how to handle it because you've already programmed your mind to handle it a certain way, take a certain risk, take a certain trade, and avoid some certain times to trade. In as much as trading the news can bring a lot of volatility, you can make a lot of money. You can also lose a lot of money as well. Yeah. You know, if you're at the wrong side, you can lose a lot of money. That's why when I'm trading and there's like an FOMC or CPI, I'm not, like I see a lot of traders, they're like, oh, I'm going to be trading FOMC, I'm going to be trading CPI. I think that's a very wrong narrative. Yeah. You know, you're not trading the news. Yeah. You're trading your strategy. Yeah. So you're trading when the strategy presents itself. It's not about if there's the news during that time when you've seen your strategy, your concept, however way it is you trade. Yeah. That means there's going to be volatility. Yeah. That will align with your strategy. But when I see traders say, oh, we're going to be trading the CPI news, the FOMC news, I think it's ignorance.
It's a gambler mindset.
Yeah, it's just a gambling mindset because you're basically trading the event and not your strategy. And that is why a lot of traders lose money. And I think that's also one of the reasons why the prop firm industry have that rule, because they don't want you trading that news because they know a lot of traders, new traders, they're trading the news events, not their strategy.
It goes a bit deeper as well. I think if you're looking to trade the news because you want quick money, it's a dopamine fix. Yeah. If you want that, go down the casino. Yeah. Go down and go on the roulette table, you know. Trading's not about that. Trading, like you said, if you've got a model, if you've got a routine, if you've got a system in place, you should be trading that. And if the news happens to be on or around that time, you've got one or two choices, to be honest. You could either step back because you think, right, we don't really know what's going to happen fundamentally. So I'm not going to take the trade. Or you could be like, well, my system's there, you know, the entry model's there. I'm going to take it. I'm going to trust the process. And you'll obviously take a loss or a win. It's as simple as that. But yeah, I'll definitely agree with that. And also to touch on what you said as well there, with what the prop firms did myself is, so similar to what you said as well with the trades going into profit, going into loss, you've not took any off the table and you've got a certain profit target in mind. I've got to reach that 10%.
Yeah.
I'm talking about this was back in the days where you had a time limit with certain firms. And obviously that's not a thing anymore. With a lot of them, which is good. But yeah, when that was a thing, when that time limit was there, it's always in the back of your mind to think, right, can this trade get my 10%? Yeah. And it's the case of, right, I'm going to hold it, even if it's reached your target, your TP. Yeah. I remember sitting there thinking, that's going to go higher or lower if I'm going to sell. And it doesn't. And it reverses. And you get took out at a break even or even a loss, worst case scenario. So yeah, like it definitely taught me to take profit off, like either that's full TPing or partial take profits. Both of them work, to be honest. There's pros and cons to both, obviously, but yeah, I think definitely being able to take that money, because when it's on a screen, when it's on your phone, it's just numbers on a screen, and it's like it's not real. Yeah. But it's like if you were running 5% profit on a 100k account, that's $5,000. If that was on your trading desk in cash, your chances are you're going to put that in your pocket. You're going to start counting it. You're going to be a bit like happier than just looking at your phone like, oh, there's numbers there. I'm just going to leave it because I'm being greedy. It's like it doesn't register how it should. And that comes with experience as well, to be honest. But yeah, just that sort of mindset really helped me with building up profits and understanding that the next trade's going to come. It's around the corner. There was even times where I'd be 1% away from reaching the take profit, but it's like the universe, God, whatever word you want to call it, tests you. It's like, I'm going to put them close to it and see what happens. And you know, the amount of times that's actually happened, and then with patience another trade comes just to tip you over to pass it, has happened a lot for myself with going through the prop firm challenges. But how many would you say that you've purchased in terms of challenges?
Over a dozen. Yeah, I've purchased a lot of because when I started buying prop firm challenges, then I didn't even have a system that I was trading, because I was
the same as me.
I was just trying it out to just pass it, and then I did it the first 2-3 times. It didn't work out, and I'm like, okay, I had to take a step back and then work on my system, back test it, tried it on demo for like 2 months. I tried it the first month. It was really, really so successful. Like I literally made 50% in the first month, and I'm like, okay,
cracked it.
Maybe I should go for it now, you know. But then I still had to take a step back to do it again realistically. And then that realistic approach I used, I think I made around 5-6% in a month. And then I was like, okay, let me try it again. And that was the first time I actually passed the prop firm challenge. And I didn't even take a lot of trades because back then my risk to reward is usually 1:7 minimum. Wow. If the trade is not going to be a 1:7, I'm just going to sit on the sidelines. Nice. And I was risking 0.5 to 1% per trade. Okay. Then, so I didn't even take up to like 5 trades to pass the first one ever. And it was really, really, it was a big milestone for me. I had to send screenshots to my family and all the rest of them. And they were like, wow, you've really done amazing. Because then, you like in trading, most traders don't really have anything to show to their family what they really do, besides empty for screenshots. But when you have a company saying this person has reached this milestone, like has this certificate. You have that certificate to show to your family. And it's a really big deal for it was a really big deal for me then, but thinking about it now and other prop firms that are challenges that I passed, then I didn't really bother to show it to anybody. I don't even discuss it with anybody. When I pass on, I'm just like, just on to the next phase. It's just development as a trader as well, isn't it? That's what it is. Like, I was the same when I passed my first ones, showing my family, showing my friends. Whereas now it's just like, it's my job now. So it is what it is, you know? And to bounce off of what you said as well with the challenges, the amount I've bought, I can't even count, to be honest with you. Especially in the beginning
I just jumped straight in, and I don't recommend anyone doing that, but that's what I did. I just jumped straight in with a 100K challenge, no system, no strategy. I was trading Sunday night. As soon as the market opened,
Yeah, I was doing that as well. As soon as the market opens, I'm in.
Yeah,
Like I can't wait to be in.
and it was just everywhere. And obviously the results showed, because I didn't pass, I think 2, 3, 4 times in a row. And yeah, self-reflection, like you just said, it really helped. I think that's with anything in life, to be honest. If you're doing something the same and you're expecting different results, you're simply not going to get different results, are you? Because you're not changing anything. And being willing to change is a big step, I feel, as well, because it's very easy to let the ego come in and think, no, I'm not going to change because I know that will work over a sustained period of time. And it's like, but the results are showing you something different. You need to do something different.
Yep.
You know, for things to change, we need to change. Yeah, I think, like we said, it's a big positive to sort of come into the industry. And I was lucky enough, probably similar with yourself, to come into the industry as it was sort of evolving, the prop firm space.
Yeah.
Because like I said, that's how I sort of really got into the depths of it.
Yeah.
I was trading before, but nothing in comparison, and I basically didn't take it as seriously before. I was following signal groups. They were just a mess.
Yeah.
But yeah, when I got into the prop firm space, that's when I really started to analyze things myself. Okay, why is that person taking that trade? Let me mark it on the charts. Can I replicate that, you know, the next day? And obviously, again, that didn't go well because, you know, with no knowledge, how can you expect to make any money?
Yeah.
Consistently. Obviously, you can make money by luck.
Yeah.
Anyone can do that. But yeah, the consistent route is what obviously we need as traders. But another positive as well with the prop firms is they allow you to go deeper on the psychology side of things, because as we know, trading is a psychological game. It really is. I don't care what anyone says, it is. And without that mentality of really understanding yourself, understanding how the market may move and how the market may manipulate the majority of people, because let's not forget, most people fail. So we need to be doing what the majority are not doing.
Yeah.
So that's whether that's going over your trades, going over your system, just multiple things really. Obviously managing risk correctly and consistently. So talk to me about any current challenges you're in now, if any. Or
no, currently, because previously I was trading with a previous company, and then they had some issues, so I had to pivot to another one.
Yeah.
So currently I'm on that company, and I'm just trying to build up their max capital. But one of the accounts I'm working on is just a 6-figure account, and I'm not really up a lot in the account, but probably I think 2.5% within the past 2 weeks, because I'm not risking too much. So my target for the week is usually between 1.5 to 2%.
Yeah.
So I'm not risking too much. So like if I'm taking a risk on a trade, 0.15, 0.2, 0.3 max, and I'm aiming for 1:5 on those trades. So if any of them hits take profit, I'm good for a week. You know, and if it doesn't, I take a small loss. And if it doesn't again, I take a small loss. But once I have one win, I'm back at break even and more profit. You know, because my goal is to just consistently take small risk, make small reward. Even though making a few thousands might seem like a lot of money to some people. Yeah. But personally, I don't really look at it on the money perspective. I'm looking at it on the percentage perspective, because there's going to be a time when you as a trader, you're going to start managing like 8-figure, 9-figure, 10-figure. If you're looking at it like, oh, today we made $1 million. Yeah. You know, it might be just like 1% of the account. Or like 0.2% of the account.
And the next day you might lose 0.2%. It's the same money, isn't it?
So it's always best to look at it at the percentage perspective. This is the percentage I'm aiming to make for this week, 1% or 2%, and then you grow and get more capital. So that way, now when you're trading 8-figure, 9-figure, 10-figure accounts, and you're consistently making 1 to 2% every week, that's like between 4 to 8% a month.
Yeah.
See, it's now starts adding up. That's when you can now confidently say, yeah, I'm making 7-figure every month.
Yeah.
I'm making 8-figure every month, because you've consistently built a system and you've grown that system, added more capital. And that's something that you can show to investors that are interested in what you do.
Yeah.
They want to add capital to your trading account. They want to see that consistent growth. They don't want to see that deep crash in your trading account.
Yeah.
They don't want to see that, because the moment they see that, it just scares them away.
Yeah.
But when they're seeing that consistent growth, and even if when there's a decline, it's really so small, it gives them the courage to invest in you, because they're basically invested in you.
Yeah.
You know, and that's the only thing you have to show as a trader. Because you can say whatever you want, I'm the best trader in the world.
Yeah.
If they look at your P&L and it has all that huge spike up and huge spike down, they'll be like, nah, I can't put my money in this.
Yeah.
Because it could go to zero. Like, you're trading with leverage.
Yeah.
So, and you're also trading in one of the riskiest industry, because anything can actually happen to the market. There could be economic events come out, maybe whatever it is could literally come out, like in 2008 crash, COVID crash, all those kind of things can happen. You know, nobody was like, yeah, it's going to happen on Tuesday, 2008, on April 2nd, 2008. Nobody was just sitting around waiting for it to happen. It just, all of a sudden, it happened and they had to deal with it. So if you're not managing risk and things like that happen, you're just going to end up with zero in your portfolio. So it's just having a system helps the traders, and working with a prop firm helps you build that system along the way.
Yeah, of course.
So you get used to it. There are a lot of cons as well. Like, it's not all glitter and glamour. And then I literally lost the account because
you're trying to reach that.
Yeah, because I'm trying to reach 8% or 10%, but because I didn't reach that within the 30 days assigned for the account, now I've lost, you know. But now it's way better. There's no time limit. You can take as much time. And then I wasn't even risking 0.2, 0.1. I was risking 1%. Because you have a time you're working with. There's no guarantee that your setup is going to keep showing up every single week. There's going to be a week where you're not going to see anything good for you to trade off. So you just have to allow that week to pass, and that's a week gone. You know, they don't care. So, but now... Then
you might have to up the risk the next time the setup comes, because the time's going down.
And now when you take that higher risk and then it hits your stop loss, you're now in a bigger drawdown. You know, so, but it's a great thing they had to take that off. So now you have all the time to trade. You can literally say, this year I just want to pass a 6-figure or 7-figure accounts and just buy it and trade it for the rest of the year.
Yeah, exactly.
You know, so it's way, way better. You know, even though there's really a lot of prop firms out there now, and it's quite hard to choose one or the other. So what would you say is your criteria when you're choosing a prop firm you want to trade with?
Number one, how long have they been around? I like to see as well, because a lot of the firms, they won't show who's running it, or they won't, you know, they're behind the scenes. There's a lot of firms out there that are like that, but there's also, on the flip side of things, firms that are out there that, you know, the CEOs are showing themselves, or, you know, they're not afraid of their identity being out there, basically. That's something I look for, because that shows, in my opinion, authenticity. Usually as well, now, they'll usually have like Discord groups that you can join. So if they do have them, then potentially join that, because in there, there'll be maybe a payout section or proof of payouts, that sort of thing. So you can check in there, make sure everyone's getting paid out, even just going on Google, researching it. Obviously, the different prices as well of the actual evaluations. There is a site out there, I can't remember what it's called off the top of my head, but it basically compares them all. Say if you wanted a 1-step or a 2-step, you could click the certain things and it would basically put them all down there, and you could put the price lowest to highest and all that sort of stuff. If it's too cheap, then that rings alarm bells, in my opinion. You know what I mean? So, I mean, if it's in the ballpark figure, if they've got good reviews, etc., then there's no reason in my personal experience, to give them a go. And also, well, we hear this term all the time, don't put all your eggs in one basket. Similar to prop firms, I guess you could say, because, you know, we never know with recent events what's going to happen with certain firms. They might just go in the click of a finger, and you might have $1 million in funding with them, and that might be your only income, for example. So you could potentially just spread it over a few of them. Maybe get a 100k account there, 100k account there, whatever you can afford, you know, 50k, whatever it is. To potentially, obviously, again, that is risk management. You know, you're diversifying that. Also, as well, now more than ever, I would say, obviously, because some licenses have been took off some prop firms for MT4 and MT5. So I would also make sure, because I use a copy trader, so I have a master account and then they get copied onto my other account. So I'd make sure that whatever the platform is, that it can link to that. Because if it can't, then it's going to make it a little bit more difficult when you're entering trades, when you've got to flip between accounts and do this and do that. I'm sure you've been there yourself. Because obviously the entry is going to be wrong or out, and then therefore the lot size is going to be different, and just a load of things can come with that. So yeah, those are the main things I look for, really. And like we said, there's no time limits on most of them now. You can take as much time as you want. Just touching on that quickly, how much of an increase or decrease in the pass rate would you say from when there was a time limit to when there's not a time limit? Would you say that the same amount of people are failing? Is it taking them longer to fail now? Or would you say it's an increase in pass rate?
I think it should have an increase in pass rate. You know, because then, like, even when I was starting out and using prop firms, there are some, in a month, I've literally blown like 2 accounts. Because I'm trying to hit the target as soon as possible, and then I end up blowing the account even 2 weeks before before it expires. You know, without that, like, even since they removed that, I don't think I've even taken any evaluation that I've blown the account. You know, like, the only setback I had was that the company basically went bust. But I didn't have any blown accounts because there's nothing to rush for anymore, you know. But some traders still blow their accounts in a week or a day. The first day they purchase the account. It's just it's helped a lot of traders, and for some traders it didn't really make any difference because they just have that mindset. Like, I used to be that guy who buys an account and I'm like, I just want to pass it this week. That's a psychology that is going to blow an account. You're not even supposed to put a time limit on when you make a certain percentage in an account. You're not supposed to put like such time limits of saying, this week I want to make 10%, or this month I want to make 10%. You can say, this year I want to make 30%, 40%, 50%. You know, there's going to be,
it's very credible,
really profitable months. And there's going to be months of drawdown. It's very normal with any business. Like, if you look at trading like a business, if you look at trading like any other kind of business, whether it's importation or exportation business, they have months where they make massive profits and they have months where they take losses. You know, it's just the same with every kind of business. You know, there's going to be months of flourish, months of famine in every business. So it's the same with trading. You're going to have weeks where you're making massive profit, weeks where you're taking losses. The only thing that keeps you in the game is your risk management. You're not risking too much. Like, let's say you have your first 10 trades, they're all winners. It means you need to cut down your risk. You know, but some traders, to them, it means you have to increase your risk.
I've been there myself. I used to do that.
It was a good chat today, talking about your experiences about prop firms and successes, setbacks, and everything. It was a good chat, and I truly appreciate you on this episode today. And for our viewers, thank you. If you're still watching up to this extent, we appreciate you for spending your time. And if you do have any questions, feel free to drop it in the comment section. If you want to learn more about how we trade and the things we offer our traders, you can click the link in our bio to find out more. I'll catch you up in the next episode.